Murabahah financing is basically an arrangement where the customers, who wishes to purchase certain goods or assets, requests the bank to purchase the items and sell back them at cost plus a declared profit. The Islamic bank specifies the cost price of the commodity that he bought, and sells it at a declared profit. In simple terms, Murabahah is sale of goods at cost plus markup, where the purchaser should be informed of his cost of purchase and the profit amount. Based the scholars of Malikis. Murabahah is a sale whereby the seller informs the buyer to obtain the object of sale, and collects a profit margin either as a lump sum, or he may state the profit margin as a percentage or ratio. Based the scholars of Hanafi. Murabahah define as the transfer of the object by obtained through a prior contract in exchange for the original price plus a profit margin. Based the scholars of Shafi'is and Hanbalis. Murabahah is a sales whereby the seller sells at the principal plus a profit margin and both parties know the cost and profit of the sale. Buy al-Muajil or buy bith-amanajil is another related mode of Murabahah financing. It is basically a trade deal in which the seller allows the buyer to pay the price of a commodity at a future date in lump sum or installments. For the case of default or delay payment by the customer, the price can no longer be raised. If the customer is in financial difficulty, despite should be given to him, and another date be fixed for the payment of the balance of the price. Majority of the Muslim jurists allow the selling price in deferred sale to be set higher than the cash sale, provided the object of the sale must come into the possession of the bank before being handed over to the other party. One, both are trade financing, sale at markup. 2. Both involved three parties, bank, seller, buyer. Murabahah obliged to disclose markup. By bith-amalajil, disclosure of markup is not obligatory. Murabahah repayment can be deferred or lump sum. But, by bith-amalajil repayment is deferred. Murabahah customer may option not to purchase. By bith-amalajil customer obliged to purchase. Murabahah, two contracts executed at two different times. But, by bith-amalajil, two contracts executed at two same time. In order to be accepted in Sharia, Murabahah financing should ensure the 1. The Islamic bank must actually hold and own the property before selling it to the customer. 2. The Islamic bank should give the option to the customer whether to buy or refuse the goods. 3. The seller must have bought the item for the Bay al-Murabahah in a valid sale and purchase contract. 4. The Islamic bank should not take deposits in advance. 5. The Islamic bank should bear the risk in the trade. 6. The cost price must be known by the purchaser at the time of the contract. 7. The profit over the cost price must be specified and known by both parties. 8. The Murabahah must not involve any of ribawi items, payable by the same, which may result in the occurrence of riba in the excess amount over the cost price. Accounting and Auditing Organization for Islamic Financial Institution in FAS 2, discussed two alternatives for the recognition of assets available for deferred payment sale. First, recognition of assets available for sale at the time of contracting. Second, recognition of assets available for sale at the time of delivery. Accounting and Auditing Organization for Islamic Financial Institution in FAS2 adopted the first alternative based on the Sharia rule that ownership of the purchased asset is transferred to the buyer at the time of contracting. Accounting and Auditing Organization for Islamic Financial Institution, FAS2 discussed two accounting treatment on financial penalty that are imposed by the institution on customers who are delinquent in setting their outstanding installments. First is to treat the amount collected in the form of penalty as revenue for the institution, and second alternative is to recognize this amount in a charity account and disclose it in the statement of changes in the Zakah and charity fund. Sharia requirements on penalty charges can be imposed only minimum amount. Maximum amount of penalty or ta'wid cannot exceed total amount of the remainder's balance. Penalty obtained by the bank or the financier may be earned and distributed according to normal profit distribution policy or distributed as charity.